Hey guys, this is a follow-up from of the previous video on the refined series. And if you've not watched the previous video, I advise you do, because that will set the tone for the new video and the subsequent videos we are going to be releasing from here. So you are getting into the advanced stuffs, and I want to take it slowly as we climb to the intermediate, and then we get to the really advanced stuff of trading. So this series began with the beginner's guide to trading, and from there upward, you're going to see videos that has led up to this present video. And if you've not gone through that playlist, I advise that you do, so you understand what we're saying in this video today. And believe me, if you can follow this series up consistently, I give you 6 months to 1 year, and you are going to be killing it in the charts. And we'll have some psychological session as well, where we'll talk about psychology, the psychology of the market, and all of that, risk reward management, how to identify yourself as a trader, all of that. So for this video, we're going to be talking about the advanced power of three concept. So we understand through the previous video that the market always moves in cycles, and that cycle is as follows: accumulation, manipulation, and distribution. Accumulation, manipulation, and distribution. And this is how the daily candle is always formed. So the regular sequence is that we want to have Asia accumulation, London manipulation, and distribution, then New York continuation of the distribution. That is always the normal, ideal buy or sell scenario. And we have many instances where the market doesn't work that way, but that is what we always want to see in an ideal buy scenario, where Asian put on the relative equal highs, right, for buys. London manipulates, and then we have New York coming, maybe continue the manipulation and then resume the distribution, or London could have resumed the distribution. New York comes and then starts a continuation after a retracement into a PD array, a discount array for the buys, and it's a premium array for the sells. They will want to target these relatively equal highs, which were Asian highs, thus what is written above highs, buy side liquidities, and what is written above lows, sell side liquidities. Okay, so this is how a typical daily candle is formed. Okay, accumulation, manipulation, distribution. Accumulation, manipulation, distribution. So for your notes, when we are bullish, we want to buy near or below the daily open. So the day open at 00:00 New York time. So you want to set your time zone to this again. An ideal buy in an ideal bullish scenario, we want to buy near the daily open or below the daily open. And an ideal bearish scenario, we want to sell near the daily open or above the daily open. This key level marked here in higher time frame PD array. So for bullish scenarios, we want to see price manipulate into a discount array. They want to see price reject off that discount array. I want to see price continue its bullish program until it is delivered into buy side liquidities resting above highs for the day, for the week, for the month, for the session. Okay, so this is not limited to just daily profile. This could be a daily candle, this could be a 4-hour candle, this could be a 1-hour candle, right? But this is an ideal scenario where we want to see bullishness in the market. Okay, we want to see price accumulate, create buy side liquidities, manipulate into key levels, discount key levels below the daily open. They want to see price reject off that key level, right? They want to find opportunities during this rejection phase, especially after the break of structure. Okay. They want to get in on the buy move until price delivers into the sell side, the buy side liquidities. And for a bearish scenario, we want to see price accumulate, right? Manipulate, trades into an a premium array, which is a key level, that from key level. So on the day, if you are, I'm going to release a video discussing about the sequence of how you could align your time frames. So we'll not discuss that here. So as soon as price trades into the premium array, you want to see price reject off of it above the daily open or near the daily open. You want to find interest to and ride the wave down until price delivers to sell side liquidities. That's basically all we are doing as traders. Okay, so I'm going to go into the charts and show you 3 examples for which you could use this, apply this idea that has been shared here on your charts. You go on backtest this idea on your own personal charts, and leave your comments below on the video of any questions you might have encountered during your study time. So let's go into the charts to find the examples. So here's an example. Example number 1. And this was yesterday's price action, Tuesday, 20th of January 2026. And I'm on the hourly time frame, the 10 o'clock, 11 o'clock, and 12 o'clock range. So let's jump down to the 1-hour time frame, to the 1-minute time frame, or to the lower time frames to look at how price delivered this price action. Remember, we talked about a 3 candle pattern for accumulation, manipulation, and distribution in our previous video. So you want to go back to watch that video. Here we are on the 1-minute time frame, which is the lower time frame we're going to be using for today's class. And I want you to observe how price puts on this accumulation phase here. Okay, accumulation, price trades high, creating a bullish narrative that we are trading higher, formed this high around 10:42 a.m. New York time, trades low, manipulates this high, right? And let's do this. Okay, so you will see that this high, these 2 highs were the highest high of the second 90-minute cycle for the day. So we had this cycle from 10 o'clock to 11:30, which is the second 90-minute cycle of the New York AM session. And we saw the new 90-minute cycle open here at 11:30. You want to mark the open out. This is 25,277.7. This is the true session open. Okay. And what the price do? Price manipulates, trades high. All these legs here were manipulations. Price was just putting on bullish scenarios, deceiving buyers to feel that price was to go higher. So we saw price manipulates here, and we can see this tiny little manipulation here into where the high of the previous cycle, right? And as soon as price took out these highs above the transition open into a key level, the key level here is the previous session high, which is a key level. What did you see? What do you see? Price now begins to distribute, and this distribution is to where sell side liquidities resting below these lows here. Can you see that? Now during this wave down, you could see price putting on this premium arrays fair value gap here, which you could use to go in on the trade, right? So price keep putting on fair value gaps, and all premium arrays were offering sell side movements. This is the first CISD. They closed below this last bullish candlestick, became the CISD, changed the sort of delivery, creating an order block. So we want to go back and watch the video on order block. So as price retraced into that order block, price began to distribute lower until price took out the sell side liquidities resting below this low. That's the sequence. Okay, that is the sequence, right? Previous session high swept by the new cycle. Cycle begin to distribute, creating premium arrays. The premium arrays are used to distribute price lower to sell side liquidities. Accumulation, manipulation, distribution. So let's go in and look. Let's go on. Let's take another example. Okay. So here's another example. This is a bullish scenario. Okay. So we have price put in this range. This candle is the range. Okay. Accumulation, manipulation, distribution. Accumulation, manipulation, distribution. Okay. Now let's investigate this price action in the lower time frames. So here we are on the 3 minutes time frame. Okay. Here we are on the 3 minutes time frame. And we are going to follow the same sequence. So this is price accumulating, right? Price put on this bearish leg downward, creating a manipulation. Price comes, sweeps this low into a key level, which was the 1 hour fair value gap. So the key level inside this pool of liquidity, 1 hour fair value gap. And as soon as price got into the 1 hour fair value gap, sweeping the previous range low, which is the previous 1 hour low here, you could see price manipulate and began distribution. So I want you to pay attention to this fair value gap that was here, that was meant to send price lower. What happened? Price displaced above it, and this became what? An order block, right? It became an order block. The last bearish candlestick before price retraces higher. And as soon as price created this order block, by the closure of price above this last two bearish candlesticks, and price closing above this bearish value gap, this bearish value gap became an inverse bullish value gap. price retrace into this order block plus so inverse value gap, and you could see price distribute high into what? Into buy side liquidities resting above these highs. So we have accumulation here, we have the manipulation leg here, and we had the distribution leg here. The moment you can find the range, remember what we say a range was in the previous video. You want to go and investigate what a range is. I laid the foundation on the previous video, so you want to go back and watch that video for better insight. Which I hope you understand what just happened here. Price accumulates, manipulates into the hourly key level, right? And as soon as price trades into that hourly key level, which was an hourly fair value gap, right? Price began to show bullish rejection. First rejection is price closing above this inverse value gap and creating an order block which price retraced into to send price higher. So one more example and we are done for today. Here's another example. We see price creating this range. This candle became the range we are going to be dealing with. Okay. Accumulation, manipulation, distribution. Accumulation, manipulation, distribution. Now let's go and investigate this price action on the lower time frame. Okay, so this is the lower time frame, the 3 minute time frame for the price action we just talked about. You can see price putting on this range. This was the range high and the range low. Just to reiterate, once price sweeps liquidity resting below a low and immediately breaks the high that created this low, the range between this low to this high becomes the new range. I already showed this in the previous video and I hope you go back and watch it. Okay, so this scenario, price accumulates, breaks below this low, sweeps the high, break above this high here. This becomes the new range. Okay, the range low and the range high. So what do we have here? Accumulation, manipulation, we have distribution. That is always the sequence. So as soon as price came, swept this high. Okay, so this was the previous 90-minute cycle of the New York PM session. Okay, we have the new cycle open up here at 25804.3. This is the new session open. Okay, and then what do we have here? Price swept the previous session high, right? The previous cycle high. So that's price swept there. Price put on this manipulation leg, inducing buyers to come into the trade, to come into the market. And what the price did? The price started distributing. What is the first stage of distribution? Price closing below this fair value gap here. And I hope you could see it. Right? That was the first. And then second, we have price close below this large bullish candlestick, which created the what? CISD and order block. And price began to distribute, violating every bullish PD array along the way, and using those bullish PD arrays as resistance to sell price lower, and then we have price open the next week, and then distribute finally to a target, which are the sexer liquidities. So I hope this video makes a lot of sense to you. And if you don't understand, go over this video again and again, and trust me, it will make a whole lot of sense to you. This is the sequence: accumulation, manipulation, distribution, the buy side of the curve, and the sell side of the curve. Until our next video, happy trading.